The Rebel Capitalist Show.
Why don't we go into your views, your kind of macro views, your views on the Fed, the government involvement that we've seen, especially the last year, but even leading up to that, and how does that fit into your Bitcoin thesis?
In terms of my macro views, and this is why I kicked myself for discovering Bitcoin in 2014, but not seeing the light until later. I had actually been studying central banking well before this. This is probably in 2005, 2006. And my thesis was that this was the root problem with so many socioeconomic issues in the world, is that we have a monopolized money supply that has given the government essentially perpetual access to the collective savings of society instead of being restricted to their own balance sheet, instead of being having accountability imposed upon them. They could run amok essentially. So, I thought I'd found the solution to the world here. It's like, hey, let's just let's go out and declare an end to central banking and everything will be better. And we're like, this sounds great, but what do we do? Like, what is the specific action we can take to do this? Mm-hmm. And I'll never forget that feeling of kind of general helplessness.
Right.
Because I thought I had found the answer here with knowledge, but knowledge is nothing unless backed by action. And I did not know the appropriate action to take at the time. So fast forward to 2014, I'm in Costa Rica on vacation, having an argument with a banker. And his position is that basically crypto assets will never happen. Banks and governments will never let it happen. And my position is the opposite, that they 100% will happen. But I just hadn't realized at that point that most of this wave of innovation coalesces to Bitcoin. So what we're looking at with Bitcoin, I guess first of all with central banking, is it is a institution that has festered around gold. Gold is the asset that the free market has selected as money for 5,000 years. And everyone understands gold is valuable. Very few understand why. And this is why I think it's so difficult to comprehend the value proposition of Bitcoin, is because you actually have to get to the first principles of money. And the first principles of money, in my view and the Austrian economic view, are the 5 properties of money. That we can essentially think of money as the most tradable asset in any economy. And the market tends to select the asset that exhibits the greatest divisibility, durability, recognizability, portability, and scarcity. So I'll brush over some history here, but it was determined by the market that monetary metals best satisfied those 5 properties. And of the monetary metals, gold exhibited the highest scarcity. And you could quantify this with the stock to flow ratio, or said it differently, it was the monetary metal most resistant to supply inflation. Mm-hmm. So market actors knew that if they parked their wealth in this asset, they were least vulnerable to inflation over time. You can also think about this as least vulnerable to wealth misappropriation, right? They could trust the relative supply scarcity as a percentage of new flows annually, more so in gold than they could any other asset. So that made gold the best asset in the world for storing value across time, right? Because it exhibited the highest inflation resistance. The problem with metals, the big drawback they had, is that they're heavy and difficult to move across space. So this is actually what gave silver some marginal utility next to gold, because gold had very high value to weight ratio. It was typically used in larger transactions for final settlement. And this is actually where we get the term cash too. Cash implied final settlement of monetary metals. But since silver had a lower value to weight ratio, it was used alongside gold as more of a day-to-day transactional metal.
Right.
Until we figured out this warehousing business where we could just warehouse the metals, abstract them into a warehouse receipt or a paper currency, and then transact in the paper bills themselves to increase the portability of metals across space. And that gave that got us to the gold standard, more or less, right? These warehouses became banks, banks became central banks. The centralization over the custody kept increasing over time because there are greater economies of scale in using monetary metals as money, the larger the supply you have, essentially. So that got us to the gold standard. But as we've seen throughout history, and I'm sure you've covered a lot with a lot of your audience, that introduced the problem of always needing to trust the custodian, which ultimately tended to become nationalized, or at least closely related to the government, who would quite often bend the rules to the point of even breaking contract law, such that they could lean on these warehousing operations or banks as a means of perpetually, as a source of perpetual credit for the government over time. So what we ended up with was supply of gold, gold receipts or warehouse receipts or bank notes printed in excess of that gold supply, repeated violations of the trust, basically, of market actors placed in warehousing operations. And the ultimate culmination of that was the 1971 Nixon Shock, where we completely went off the gold standard and moved into this global fiat monetary system experiment, frankly, that we're 50 years into today.
Okay, I would assume that or part of your argument for Bitcoin being superior to gold would be the portability. Is that correct to assume? And therefore, you're taking a lot of the power away from the banking system because you don't necessarily have to put your Bitcoin in a bank. You don't have to have that custodian.
I think it's a great place to start, and that is one of the most important aspects of Bitcoin over gold. But actually, if you look at all 5 monetary properties, Bitcoin is superior. And again, as I've argued in much of my writing, it's almost perfected them. So in terms of divisibility, Bitcoin is divisible into 100 million units called Satoshis or sats. And it can be, should its market cap reach a point that further divisibility is warranted, you can have a soft fork to increase the divisibility even further. So it's pretty much perfectly divisible. In terms of durability, Bitcoin is just pure digital information. So the entire Bitcoin history is stored on every node and miner worldwide, and information stored in a distributed fashion is pretty much the most immortal thing humans can create. And the example I like to give here is something like the Bible. All right, it's a book that's been in print for thousands of years. It's just information stored in a distributed format, and it's a book that outlasts empires for that reason. All right. In terms of recognizability, which refers to the auditability and the counterfeit resistance of a money, if you're running your own node, Bitcoin is basically totally immune to counterfeit, and you can audit the global supply instantaneously at any time. This is a really important and unique feature of money. It also obfuscates the need for a lot of the institutional layers and framework we have today, which are built around, to your point, the lacking portability of gold. The reason we had all these financial institutions, the warehouse originally that we built layers and layers of institutions on top of, was because of the lacking portability of gold. If we just think hypothetically, had gold been dematerialized or made of pure information, could be beamed around the world at the speed of light, could be stored in your mind, stored in computer software, a book, anywhere information can be stored, we wouldn't have a need for these custodians, right? Not to the same degree. Like I'm not saying that you wouldn't have them at all, but there wouldn't have been this opportunity to hijack the prime monetary network of the world as we saw with gold. And that's what Bitcoin is, right? Again, pure digital information that's capable of doing all of those things I just laid out. And then finally, Bitcoin's really interesting because it is, as I've argued, a discovery, actually, and that we've discovered absolute scarcity. So gold historically, tends to inflate around 2% per year. We actually, as its market value has grown, we're actually increasing the amount of gold we're mining every year. But because gold is indestructible, its stock is growing as well. So it tends to work out to be around 2% inflation per year, which if we flip that, again, stock to flow is the inverse of the inflation rate. We'd say its stock to flow ratio is around 50 to 55. It's actually at 1.8% per year. So it's around 55. Today, we have Bitcoin with a stock to flow ratio equal to gold, roughly. It's about 55 or 60. And then at the next halving event, we have the world's first asset ever with a stock to flow ratio double that of gold. And it keeps doubling every 4 years after that, before reaching infinity when the last Bitcoin is mined in the year 2140. So with Bitcoin, we have something radically new. And this is where you get into the rabbit hole, because we have something that's as close to economic perfect information as we've ever had. Economic perfect information is an ideal state in economics where all market actors are fully informed and competing on a very pure basis, which in theory generates the most wealth, and everything's arbitraged away. Now, you could never get to that point, but we now have a money that's composed of those principles. Like, everyone knows the supply, everyone knows the rules. It's a totally equitable playing field, essentially. And the other thing that's interesting is that, gold became money because it was relatively scarce, right? It was the most inflation resistant asset. But in the digital domain with Bitcoin, we have the first instance of absolute scarcity. So if we could flip a switch and make everyone go mine gold today, we could get a lot more gold above ground much more quickly. It's just a function of how much time and energy we've allocated towards gold production. With Bitcoin, that's not the case. We could flip a switch right now and make everyone in the world go mine Bitcoin, or turn their computers to go mine Bitcoin. The Bitcoin supply, the difficulty for the mining algorithm adjusts. It has a dynamic adjustment feature such that it always becomes more or less difficult based on free market inputs in a way that adheres perfectly to its fixed and diminishing supply schedule over time. Right. So we know with perfect information what the supply of Bitcoin is today and what it ever will be. Now, this gets super interesting when you consider that supply curve maps really nicely, almost perfectly over its 12-year history, to its price curve. Because if this pattern continues to hold, the incentives to front-run Bitcoin become enormous, right? Because if the stock to flow pattern, it calls Bitcoin, has Bitcoin above $10 million by the year 2030, for instance. So, and this is where we get back to something Satoshi wrote originally, is that Bitcoin could become a self-fulfilling prophecy. And that if enough people adopt it and it creates a market capitalization around itself, because it's following this pattern based on its supply curve that everyone can see all the way out until the year 2140, that it gets into your mind in a way like, wow, this thing could go to $10 million, so maybe I'll put 2, 5, 10% of my assets into it. But every time someone makes that decision, you're actually adding to the fulfillment of that price target. Mm-hmm. So it sounds a little trippy perhaps, but I would say that getting into Bitcoin is a bit that way.